defend yourself against humanity while simultaneously serving humanity. I gave a talk at Capitalism and Morality year before last about the futility of pessimism. If what you do is look at the circumstance around you and crawl in the corner and assume the fetal position, the guarantee is that you lose. So why would you guarantee your own loss?
Today's episode is made possible by Days to Expiry, a tool that I co-created with Florian and Lovis to help navigate the complex world of options trading. As someone who has extensively used options to enhance their long-term investments, I can attest to the importance of getting the right signals from a sea of trading noise. Achieving financial freedom is a crucial step towards personal freedom, a topic that many of our guests have already spoken about at length. To learn more about how I am working towards my own financial goals, visit daystoexpiry.com.
Welcome back, Rick Rule. Thank you so much for taking the time once again. In the meantime, we've met up in person at the Goldmesse in Frankfurt, and we had a very fun evening with you and Bonnie. Thoroughly enjoyed that. Every time we see you, either online or offline, it's a pleasure. Today, we really wanted to talk to you about kind of a continuation of our discussion in the last episode, which was, we titled The Arithmetic of America, same title as the speech you gave in Vancouver when we saw you at Giants Conference. And I think it's really striking a chord with people that are listening and watching. So we wanted to kind of pick your brain on, 25 has ended, the last quarter, kind of look at some recent events there. And January is only a few days old, not even a few weeks old, and there's so much stuff happening already in the world. So we really wanted to see these events with your eyes and get your commentary on those. And then, of course, how can we as prosperous, smart, and hardworking individuals set ourselves up to succeed in these times that could otherwise be perceived as tough. So welcome back, Rick. Thank you so much for coming on.
Thank you so much. And as you mentioned, it was a pleasure to see you both in person a couple times in the not too distant past. So thank you for that. And I look forward to today's discussion. Thank you, too, for spreading the message about the arithmetic of America. There are so many discussions that go on today about what we'll laughingly call current events that are narrative-oriented and lend themselves to sort of partisan bickering. It's important, I think, that you have a baseline in fact so that you superimpose narrative on fact rather than fact in search of narrative. And I thank you for helping us get that message out.
Yeah, absolutely. Jay, do you want to start us off?
Yeah, I mean, Rick, everyone that is interested in gold and silver and uranium, they all want to know what Rick is thinking about and how he sees the current situation, right? And at the moment, when you wake up in the morning, you see, like, let's say you look at the price of silver, you see it going up 6%, down 5%. I follow people on Twitter that tell you what the price is of silver in, let's say, China, and it's sometimes at a premium of $5, $6, $7 to what's happening in the US. Is this tied back to the arithmetic of America, right? Like when we talk about the debt situation, we've been talking about it for so long. Is this signs of things getting critical? I mean, what Lovis mentioned, the geopolitical stuff as well earlier on. Like, are all these things are they connected somehow? And how do you perceive those things?
I don't think things are critical yet. I think there's a lot of confidence left in the world. I think that confidence may be misplaced, but I would remind both of you and most of your listeners that we exist in an echo chamber. What's happening in precious metals markets is of interest to us, but there are still not very many of us, more than there used to be. And the fact that you've increased a very small number by a significant percentage means that you've seen up moves in precious metals. But the truth is that if you go to the biggest institutional investors in the world and ask them to spell silver, they would be challenged. The circumstance that we have, I joke, is very similar to going to evangelical church in the U.S. South and asking the choir if they believe in God. Of course, our people look around at every problem on the planet and they perceive that as stemming from low gold and silver prices. But that isn't, in fact, the case. I think it's very important, as you said at the outside of this, that you look at the circumstances around us. You make the best projections you can as to the outcome because you can't know the future, but you think of them in the context of your own portfolio. When you ask me, as an example, what I'm doing, that's different than what advice I would give others whose circumstance was different than my own. I was an extremely aggressive investor in the small mining companies in, 2018, 19, 20, 21, 22, when really nobody cared. And for me, that speculation was built around hate. It was built around a contrarian strategy. For me personally, because the bull market that we have seen extended down into its bottom reaches, the penny dreadfuls, much more quickly than prior bull markets. What I personally have done is sold 25% of my junior speculative positions. In other words, I've repositioned capital upstream into beta from alpha. This is exactly contrary to my strategy in prior bull markets, where the markets acted differently, where it took a while for money to cascade down from the best of the best to the penny dreadfuls, to the speculations. In this particular case, the progression of the bull market happened much more rapidly than I have ever experienced. And while I have some suspicions as to why, that was less important to me than what I was trying to accomplish in my own portfolio. So I sold a quarter of my upside, recouped all the capital I'd spent in the sector, and I eliminated my downside, which seemed like a pretty good trade for me. Similarly, in the silver side, I have some, one might call it core holdings in silver, although my real core holdings are in gold. I consider silver a speculative asset. But I bought that silver because I thought it was oversold. I thought it was hated. I thought that it was literally a certainty that the silver price would escalate through $50. I was wrong. It escalated through 80. For me, the silver that I bought in anticipation of the secession of hate was a speculative position, and I'm selling it now. It isn't that I believe that silver won't go higher. It is because physical metals in my own portfolio are designed as liquidity and insurance, and I consider silver to be a speculative asset class and gold to be a liquidity class. So I will be selling my physical silver and either redeploying that money into oil and gas, which is still hated, or redeploying it back into gold to serve the purpose that physical precious metals has in my portfolio. Whether or not these actions are efficacious to the rest of your listeners depends on their individual circumstances. With over 8 billion of us on the planet, each with different circumstances and prejudices, there is no one-size-fits-all strategy. I think it's very important at the beginning of our discussion to frame the discussion in the sense that we talk about world events, and the idea is that the individuals listening to this discussion frame the discussion in their own context.
Right. I mean, so something that I noticed that is different with the current goings on. So when I'm looking at let's just call it the intervention that happened in Venezuela recently, resources are a big part of the headlines of why the narrative says that that's why the US is doing something. And that's a little different than it used to be, I think. Like, so when I think back 20 years to Iraq, then it was like all about democracy and bringing freedom, right? And at least that was the framing. I don't really believe that was the full story then either, right? But there does seem to be a shift in awareness to some degree. Is that a signal that you would pay attention to, or what do you think?
I think there's, in the United States, among some people, an increasing acceptance for naked aggression as opposed to nuanced aggression. Uh, Further, with regards to Venezuela, this is an interesting circumstance. Um, the popular media, and frankly, most of social media, is suggesting that Mr. Trump's action in Venezuela is fait accompli, that regime change has happened. That's not what happened. We kidnapped the head thug and his wife. There's still a pantheon of sub thugs, each of which would like to become the head thug. The army is still under the control of domestic as opposed to foreign thugs. The treasury, such as it is still under the control of the Chavinistas. The Chavinistas have had 25 years to put their cadre throughout the military, throughout state governments, throughout the local governments, and that whole infrastructure, superstructure, still exists. And as to the opposition, reports that I read tell me that between 5 and 6 million of the opposition now oppose from Panama and Houston and Brazil and Colombia. So one wonders about the popular preference of the citizenry in Venezuela. I think that, and I'm not suggesting that regime change won't occur, but we're acting in global media as though regime change has occurred. And that has not occurred. I read yesterday that the rump of the Venezuelan government uniformly condemned American aggression and actions. This hardly seems to me like a totally compliant regime. Now, it could be that Mr. Trump, who obviously has some connections there, sidebar, they built an exact replica of his house in Texas for the extrication. So obviously American intelligence, with regards to this, received some assistance from Venezuela. And it could be that Mr. Trump or his operatives have managed to convey to individual thugs who are at the top of the Venezuelan governmental mafia that the same fate awaits them as awaited Maduro if they are not more compliant than he was. Time will tell how that will work. But I think the suggestion that regime change was successful is very, very premature.
Rick, talking about regime change, would you say that then, in terms of investing, the investing regime, is there a regime change there where I'm just wondering, like, let's say an investor wants to invest in oil, right? How do they still look at it the same way as they did years ago, when now you can have large producing countries getting their heads of state kidnapped, you get large producing countries like Russia and Iran getting sanctioned, tankers that are traveling the high seas are suddenly boarded and taken over and commandeered. Like, do these things affect how you go about investing in a commodity? Because then it's not just supply and demand anymore, right? It gets more complex.
I think it depends on who you are. I think investors need to not trade the news. Speculators can trade the news. As an example, I've invested in oil and gas in Venezuela specifically twice. In both cases, it started well and ended poorly, but that's a different question. A speculative investor might look at private capital formation in Venezuela, or speculating on the successful financial settlement of obligations owed pursuant to international law to foreign companies by the Venezuelan government, and speculate on that. Investors should be very careful about allocating capital in circumstances that they don't understand, and that their news sources, be they the Wall Street Journal or Bloomberg or Schlepp, Schmuck, and Schmo don't understand either. So to the extent that somebody characterizes himself or herself as an oil and gas investor, they would be well advised to stick to a hell or high water stock like Exxon. To the extent that somebody is willing to tolerate volatility and the probability of loss, they can speculate, as an example, on Venezuela without knowing the facts, because they can't know the facts. The facts aren't in. If somebody is a non-US based value investor and speculator, the deepest values in the energy business that I'm aware of worldwide are in Russia. It would take a rare breed of speculator, somebody like me, were he able to take advantage of that opportunity. But I hope you understand the nature of the question. When we look at the future, understand that we can't know it, and that our ability to handicap it as a consequence is lousy. Real investors need to confine themselves to circumstances where, with the information that's knowable, the probability of a reasonable return on capital employed exists. Activities beyond that scope are inherently speculative, and people need to examine themselves before they examine the circumstance and determine whether or not they have a chance to be speculative, and whether or not they have the financial and psychological wherewithal to take the risk. I do. The money that at 70, well, almost 73, that I invest prudently, I made by speculating wildly. I have that gene. After 60 years, I have the experience. And frankly, I can afford the risk. But I see an awful lot of people engaging in speculative activity without the psychological and financial tools to do so.
Yeah. You at least need to know the difference, right? At the very least, what you're engaging in. So if you get tripped up by that concept, then probably better to educate yourself some more.
Lovis, I've
Um,
over 35 years, I'm told at least, that I've reviewed and graded almost 100,000 individual securities portfolios. And in addition to using that facility to teach people, I've learned a lot about what people do wrong. I mean, really, really, really a lot. I'm informed by this incredible database of what von Mises would have called human action.
I mean, it's a big ask, but what is there a way to draw out, like, what are the top 3 things people do wrong, other than what you just touched on already?
Top 5 would be easier. It's a large data set.
Yeah.
The first thing that people do wrong is that there's an inconsistency between their strategy and their tactics. Many people get the big picture right, but the big picture plays out over time. And to truly benefit from it, you have to benefit from compounding. And so, as an example, somebody who agrees with my oil and gas thesis, which is a 5-year thesis, ends up having trauma holding stock over a long weekend. So they attempt to employ a 3-month trading strategy, pardon me, tactic, against a 5-year investment strategy. And that doesn't work. The second thing is that most people are lazy, which is to say that they would prefer to feel as opposed to think. And they don't understand enough about their individual investments, and they don't spend enough time monitoring their individual investments. I ask investors and speculators, but particularly speculators, to own the number of positions, the number of stocks that corresponds with the number of hours per month that they intend to spend understanding their portfolio companies. And that does not include listening to podcasts like this or watching me on YouTube. That means reading annual reports, quarterly reports, resource statements, insider filing statements, really understanding the affairs of the companies that they own. This is probably the most common failing. The third mistake I would suggest is that people are anti-contrarian. They understand the contrarian narrative, but they don't have the courage of their convictions until the price action in the underlying narrative has validated the thesis. By that time, most of the value in the understanding has already been absorbed by the price action. I could have come on your show 5 years ago at $1,800 gold and toned on endlessly about the arithmetic of America. It was earlier but inescapable at that point in time. But at $1,800 gold, nobody cared. At $4,500 gold, the narrative has been validated by the price action, but a whole bunch of the benefit has already been used up by the market. um, I would campaign till I was blue in the face that uranium at $20 a pound had to go to 60 because the fully loaded cost to produce uranium, included cost of capital, was $60. People were making the stuff for 60 to sell it for 20. Really, truly, losing $40 a pound trying to make it up on volume. But the fact that uranium was mired at 20 meant that that message, while it was understandable, nobody cared about. Now that uranium is at 80, everybody cares about the narrative. And I would suggest that that's a huge problem. When I now talk about the fact that gold and silver, well, I think they go much higher, are no longer unloved. And I personally am switching some of the capital that I had invested in gold and silver when they were unloved into oil and gas because it's unloved. People say, "Are you out of your mind?" No, I'm not. In fact, I wasn't out of my mind when I invested in gold at 1800, and I'm not out of my mind when I invest in oil at $55. I'm forward thinking. Now, you two guys, Lovis and Jason, might suggest that being 5-year forward thinking at 73 years of age is out of my mind. The idea that I've become more patient as I have less time on Earth. I'm cognizant of that criticism, but old habits die hard.
One thought, well, a couple of thoughts. So with the oil and gas, and I saw you comment on this. I guess that we've had the luck of having on the show is Doomberg, and I saw somewhere that you occasionally read their stuff as well, and they look at the price of oil in gold, and they say
Yes.
actually oil's been getting cheaper and cheaper and cheaper. Yep. So what do you say to that?
Well, if oil's getting cheaper and cheaper and cheaper in gold, it tells me that the value's in oil. I mean, that one's fairly simple. I see them disconnected, except that I do see gold as a true medium of exchange. If you began, as I did, denominating some of your savings in gold in the year 2000, you're struck by how cheap a lot of stuff is. The S&P 500 measured in gold is cheap. Housing measured in gold is cheap. Health insurance measured in gold is cheap. If you measure these same things in euros or dollars, they're expensive. What that comparison really goes to is the deterioration in purchasing power of the medium of exchange, rather than the relative desirability of the goods on offer. To understand the desirability of the goods on offer, you need to function on the interplay between price and utility and price and supply. So while I think that Doomberg's discussions are relevant, I think they have more to do with gold than to oil. When I look at oil, I look at what happens during periods of supply shortage, which is to say that in the near term, the price quadruples or septuples. Because as a species right now, we can't do without the stuff. We will be able to, but we can't do without it. And then I look at the fact that the oil companies are priced based on narrative rather than fact. they're priced based on the fact that the big thinkers of the world, Angela Merkel and what's her name, Greta Thunberg, these, real finance and physicist geniuses, tell us that peak oil demand occurs in 2030. And so when they do net present value calculations of long-lived reserves, they leave off the tail, which is where the value is. And that's wrong. It's just wrong. The third thing that I look at that by the way, I'm a huge Doomberg fan. They're very clear communicators over there. The third thing I look at is the fact that as a consequence of low prices, which by the way are always the cure for low prices, that the industry is underinvesting between $1 billion and $2 billion a day in sustaining capital. I've been in that business my whole life. In a capital-intensive business, if you withhold capital 4 or 5 years out, you have no business. And so in oil, we're absolutely positively setting the stage for production shortages, unless we have the same new cocktail of technologies that fueled the shale boom in the United States 20 years ago. That would be the caveat. But the stage is absolutely set for a rebound in the oil price, whether or not that is reflected as dramatically for those 7 or 8 people in the world whose lives are denominated in gold is a different question. But for most of the mortals, including most of the people who listen to your show, whose lives are denominated in euros or pound sterling or Swiss francs or US dollars or Canadian dollars, the price of oil isn't merely going to go higher, it's going to go much higher. It isn't going to do it for 3 years or 4 years or 5 years, which seems to be beyond most speculators' perceptions.
Rick, so for positioning in oil, how do you see it? Would you say it's similar to how it might it might progress similarly to how it did with silver and gold? So in terms of this time, the speculative, as you call it, penny dreadfuls will move more, or should we be looking more at the safer multinationals like Exxon that you've mentioned a few times?
That depends on you, Jason, not on the market. In my experience, commodities bull markets are led by the commodity. And I'm not suggesting that people store a bunch of oil in their basement, or even necessarily that they buy oil futures. But the best proxy for that would be the best multinational oil companies in the world. With my apologies to the Europeans, those are all American. After the commodity moves, beta moves, which is to say the largest and the finest companies in the sector, the ones with the lowest operational risk and the most trading liquidity. What I found after 50 years in bull markets, and by the way, I didn't do this until 15 years ago, but what I found is that commodities bull markets are profound enough that if you capture the beta, you almost don't need the alpha. In other words, taking a whole bunch of operational risk to get a 10-bagger over 10 years, as opposed to taking almost no risk whatsoever to get a 3.5-bagger, 350% over 10 years is a pretty good move. And when I look myself at Exxon, I see a company priced at about 70% of net asset value at $55 oil. If the oil price in nominal terms goes to $85, that 35% increase in revenue triples margin. And given that net present value is a function of margin, I suggest that 5 years from now, Exxon will be worth, I don't know what it'll sell for, but it'll be worth 3 times what it's worth today. So the idea that I can buy a triple at a 30% discount to net present value and enjoy a 2.75% dividend is not unattractive. Alternatively, I could, look in the AIM market in London and I could buy consolidated orangutan explorations, or some collection of well-intentioned oil and gas exploration companies, exposed myself to very high general administrative charges relative to assets under management and a lot of exploration and single company risk. And by the way, single location risk, in hopes of a low probability 10 bagger. Probably a more judicious approach for somebody who really wants to work hard would be a portfolio that was 75 or 80% beta and 20 or 25% alpha. It could be that if you chose wisely, that the alpha part of your portfolio, despite the fact that you only had 20% of the capital employed, would outperform the beta. But the probability of that is low. I should also talk to net present value. People underestimate the importance of dividends in strategies that require time. If your avoided cost is deposit interest rate, say 4%, if you miss out on 4% compounded for 5 years before your investment goals are met, the time value of money suggests that you made a lot less money than you thought you did. To the extent that you're engaging in a strategy where time is on your side, but time might be long, the ability of the dividend income to offset the time value of money is important. The third thing I would suggest goes back to your original discipline, you two. If you believe that we're in a secular bull market that will be marked by volatility, the idea that you sell short-dated puts and calls around core positions, particularly during periods of time when the VIX volatility index, for those who don't know, is above 20. This has made me an enormous amount of money over time. The idea that the market pays you to buy low and sell high when you ought reasonably to do that for free, or much more usually in puts and calls dated less than 120 days, that both the put and the call expire worthless and you just grab the premium. That's a wonderful strategy to enhance gains around core positions in natural resources where the outcome, the unanswered question, almost invariably begins with yes, but the time question doesn't. It's a really, truly wonderful strategy. Now, it's psychologically very trying because if you sold puts and the stock gets put to you, that means that your core position has deteriorated value and you're angry that you got more of a stock that was already down, forgetting temporarily your opinion as to its ultimate value. Similarly, if a stock gets called from you, it means that your portfolio is ripping. You like the stock because it's done well. But the truth is, over time, to be forced arithmetically to ignore your prejudice, buy low and sell high, really, really, really has rewarded me. It's been psychologically punishing. There have probably been 30 exercises, puts or calls, probably more actually, that have occurred to me over 50 years. And in every circumstance, they were psychologically challenging. And in almost every circumstance, they turned out to have extraordinarily happy endings. Not as happy as the fact that most of the put and call premiums I received for free. In other words, I was neither called from nor put to.
Yeah, thank you so much for emphasizing that point. Right, I mean, that is the strategy that Jason really got me interested in. And like you said, the unanswered question. Well, the answer is yes. You don't know. You never know the timing. So it's a good activity to engage in because people like to be busy doing things. And the hardest, like I was just reading Charlie Munger's Poor Charlie's Almanac, and he's like, the work. Once you've made the investment, your job is to sit on your hands,
Yes.
and that's the hardest part, right?
Yes. And I wonder about my own put and call activities. Mercifully, I was partnered with a guy named Jeff Howard, who loved to build net present value volatility models. So in terms of a lot of the work that I didn't. He did it. And when the circumstance seemed really, really, really compelling, I'd write the trade. Now, I never tried to maximize my put and call wins. In other words, I always regarded it for myself as monetizing volatility, nothing else. And so at any period in time when the VIX was below 20, I just didn't do it. You know, if what you're doing is trying to profit from volatility in a market where there isn't volatility, why bother? You know, and you make a really good point. Buffett said the same thing. He said most of the money he's made in his life wasn't by thinking, it was by sitting. Further, and I've come to identify with this, he said he really preferred investment opportunities that, quote, required of him sloth and lethargy, both of which he said he had in abundance. I've come to understand that.
All right. So be right and sit tight.
Mhm. Or if something changes, you know, do enough work to understand that something's changed. Sometimes you have a thesis that you discover for various reasons is wrong. And when you discover your thesis is wrong, you have to stomp the stock. If the reason to own a stock goes away, win, lose, or draw, the stock has to go away. That's something else I've noticed in portfolios. People, uh, Jason, 100 times I've had it. You know, I call people whose portfolios interest me for various reasons to try to understand why they did what they did, how they did the good stuff, why they did the bad stuff. And the conversation goes like this, you know, let's look at the beginning of somebody's portfolio. I don't know, amalgamated aardvark. There's a couple of A's there, right? And so I say to the guy, well, he'll usually say to me, what do you think about amalgamated aardvark? I'll say, well, you know, until this moment, I was blissfully unaware of its existence. Tell me about it. And he says, well, I don't know anything. Well, if you don't know anything, why do you own it? Well, Bob Bishop recommended it. Well, Bob Bishop's been retired for 16 years. Why do you still own it? Well, I can't sell it. Oh, why can't you sell it? Well, I bought it for $4 and it's at 40 cents now. And if I sell it, I'll lose $3.60. And then I need to say as gently as I'm able, which is not very gentle, no, sir, you've lost $3.60. The question is, what will you do with the 40? If you hold it, it's the same as you bought it, because today you have a choice between having the paper and having the 40 cents. Those are your two choices. Any day you hold a stock, you bought the stock. So if you weren't willing to double your position, why don't you sell your existing position? These aren't hard concepts to talk about on an interview, but they seem to be extraordinarily hard for most people to do. Having been in a position where I've had scores, probably hundreds of speculative losses over the years, it's easy for me. It's not pleasant, but it's easy for me to say the reason that I owned XYZ was I believed that it was more likely than not that the following had come to pass, and it's not coming to pass, so I have to sell it. And if I bought it at $1.50 and I sell it at 80 cents, it's better to get the 80 cents than to get zero, which is the more likely outcome.
Okay, thank you. It's like you said, it's when you say these things, it sounds so sensible. When you try and do it, it's just somehow so difficult. But yes.
All I can say is this, over 5 years, try it, you'll like it.
Rick, I'll cut, Lovis, let me just cut in, okay? Have you seen the news come from my time last night about the Federal Reserve getting into trouble with the law?
No, but sounds wonderful.
Yeah, so I watched a video of Jerome Powell giving a statement that the Department of Justice is now investigating them for probably irregular methods when it came to renovating a few Federal Reserve buildings. And Jerome Powell's basically saying that it's a lawfare and it's a political move, right? So I know from the probably something that you said from years ago that has always stuck with me is that the price of gold is actually like a reflection on the lack of trust in the U.S. Treasury bond, right?
Correct.
I didn't misquote you, I hope. With things like that happening, that will, I would imagine, take the trust in the U.S., let's say, financial system. It can't be good for them, right? What are your thoughts on this
I'm not so
event?
sure about that. I mean, to be honest with you, while I have no use for government totally, I interact with the Fed fairly continually as a guy who's been a bank investor into starting a bank. And at least the rank and file of the Fed, the lower level of employees, despite the fact that it's harmful to my anti-government narrative, I'm always impressed by their quality. I wish I could tell you that I thought they were a bunch of scallywags. In fact, they aren't. I also think that the American people, much like the European people, want to have faith in their government. They want to assign responsibility to their future to Brussels rather than taking responsibility for themselves. It's more convenient to say the big thinker's going to organize my life. The consequence of that is that both Americans and Europeans are very tolerant of perceived corruption. If the corruption took place by a political party that they believe has their own interests at heart. So, to the extent that you think the Fed has your back with lower interest rates, and they handed out $100 million in preferential contracts to contractors whose political aims were not dissimilar to your own, I think you'll find the voters to be remarkably tolerant of that activity. To the extent that you're an old guy like me and you shave $20 a month off Social Security, now that's corruption. That's a travesty. I'm afraid I'm fairly cynical about that. And what I said, by the way, with regards to treasuries, treasury securities, it's partly a function of trust, but it's much more importantly a lack of faith in the maintenance of purchasing power, which is to say, intelligent people, people who can do math, I dare say people who listen to the Arithmetic of America, probably believe that the rate of deterioration in the purchasing power of the US dollar is somewhere between 8 and 10%. And if you're getting paid 4% in a US 10-year treasury, in a currency where the purchasing power is depreciating by 8%, rather than receiving a 4% yield, you're losing 4% compounded. If you lose 4% compounded for 10 years, what that suggests is that you give the U.S. government $100,000 and they give you back, including compounding, $50,000. A guarantee that you will lose money. And it's that I think is the real thesis of the gold trade. What compounds that now is that you used to look at the U.S. Treasury and you used to say, well, it isn't a store of value. It's highly liquid and it's highly predictable. Less so now. When you put the obligations that the U.S. Treasury, that the U.S. government has to bondholders in a long line of other responsibilities that they have. So now you have a problem with both the coupon and the security. And I don't think that goes to allegations of abuse with regards to the construction of treasury facilities.
Hey Rick, it's funny. It's funny you say that. Lovis's wife and I have been talking a little bit about constitutional silver, like pre-1964 coinage.
Yep.
And just before the show, I just sent her this tweet, right, where somebody was saying that they just bought $20 worth of quarters, and it's worth 1,200 now in its silver value. So
I love these minimum wage discussions that people
yeah,
have. I forget
yeah,
what year it was, but I think the minimum wage was $1.25 at that point in time. And if you got paid in 5 quarters, or if today you got paid in 5 quarters, the minimum wage is irrelevant. It is true that with the skill sets in the American economy, that the utility generated by many workers doesn't afford them the ability to live in our society. I mean, there is a real problem with regards to the capability that many workers have to generate enough utility after tax uh, to have a reasonable standard of living. The other side of the equation, though, is not so much the prevailing wage rate for workers to generate utility as the collapse of the currency, the collapse of the purchasing power of the currency. And the point that you make is a wonderful point. If you maintained your standard of living, in particular in your savings, in an asset class that didn't deteriorate but rather held its purchasing power, the circumstance over the last 25 years is a lot less trying.
yeah. Yeah, I think the minimum wage back then, because I sent Lovis's wife another tweet about that, and I think it was $1.25, and in today's silver value, that's something like $75 to $80 an hour. So
Yeah.
everyone would be pretty happy to be getting that as an hourly wage, right?
Now, unfortunately, in the United States, there's a lot of workers whose educational levels, skill levels, or whatever don't justify 5 quarters. I live in a town where there's a genuine labor shortage, where the minimum wage laws are irrelevant, where McDonald's has to hire workers at $20 an hour. And so many of those McDonald's workers are functionally illiterate that the keys on the cash register are icons. Um, it is going to be difficult for American society to utilize that labor force when the utility offered up to customers by that labor force is insufficient to afford them a reasonable standard of living. And I'm not sure what the answer to that is. I mean, I know what's going to happen. What's going to happen is that the low wage jobs are going to be automated away. That you're going to have a McDonald's that rather than having 40 employees at $20 an hour is going to have 4 employees at $80 an hour. And those employees are going to have the ability to operate all of the automation in a McDonald's. From the investors in McDonald's point of view, this isn't a bad thing. From the customer's point of view, this is a great thing. But from the point of view of the 35 workers made redundant because they lack the skills, that's not a good thing.
Yeah. I mean, this is where all the big proponents of AI and robotics taking over everything talk about we need what is it, the general what is it, general basic income basically for everybody, and somehow
UBI,
that will
yeah.
fix, yeah, UBI, so universal basic income. So, and then they think that fixes it, but I think in my mind this has never been a viable solution, because we know from such scientific works as the movie The Matrix, right? And of course, actual scientific studies that like utopias actually never work, right? People get severely unhappy. So if I'm getting paid to just sit on the couch and do whatever, I mean, engage in self-expression, whatever that means, then everybody should be happy. But in fact, my self-expression is that I love doing business, right? I love building stuff, and I love figuring out how to create value for others. That's like, it's like one of my addictions. Now you could argue, I mean, I'm reasonably successful at it. I'm no Rick Rule at it, right? But I'm doing well. So it's but I enjoy it, right? I have fun with it every day. So I mean,
I get that completely, Lovis, and I concur with you. What you need to understand is that the workers whose skill sets can't afford them the standard of living that they desire don't give a shit about your theories. They care about their wages. And there are more of them than there are of you. And they vote. There's a great American slogan that an election is 4 coyotes. For those who don't know what coyotes are, they're small, agile predators, and a lamb voting on the lunch menu. When there's 4 coyotes, which is to say consumers, and 1 lamb, which is to say a producer, you know that the lamb is on the lunch menu. And the consequence of that is that while you understand the importance of productivity and reality, you also need to understand in terms of your own preservation that in your lifetime, the conflict between what is and what society believes should be will be ongoing, and more often than not, won by society, not by fact.
Right. So how do we
And
bridge that gap?
you take care of yourself. You absolutely, positively invest enough in your own skill sets that you aren't victimized by fact, and you understand that material well-being is a consequence of your ability to deliver utility for other people. Wealth really truly is the delta between the utility that you generate and the utility that you conserve. So first of all, you have to get some of that delta out of harm's way. You need to protect it in some way, shape, or form from the coyotes. And you need to develop a facility to invest it prudently so that at the same time, the utility that you generate, the delta that you generate, continues while that capital itself compounds. That's all that you can do.
So, one question about that, right? So what's really been pinging on my radar a lot over the last 2-3 years already, and I'm even noticing it with guys that graduated college around the same time as me, engineering grads and stuff. Like, it used to be everybody wanted to work as game developers or build software, work at Google. And there was a gradual shift, and now I'm seeing it more and more, that they want to all do defense stuff. And I'm like, okay, I mean, defense has some cool applications. Like, I mean, if you can live with killing people and destroying stuff, that is. But generally speaking, there's some fascinating tech in defense. But I think that's actually not why they want to do it. I think it's because they see that's where the money is, right? Because there's so many factors, and I mean, but there's also so much cronyism that kind of can, if you know the right guy. And like, I've heard even of people, this was even, I forget which podcast this was on, but it was a massive podcast. And they were even talking about this, like, yeah, like the second slide in this pitch deck was him shaking hands with a guy who's like in the White House. And that's why his company will be successful, because he knows the right people. So, cronyism is the pitch, right? For the investment thesis. On one hand, I get it. Selling to the government can be incredibly lucrative. On the other hand, I'm like, do you think it's ever worth like engaging in that to make a buck?
I guess it depends on your own circumstance and your own belief. For most of society, I'm going to say most of American society, there is a belief that defense expenditure, in the context of maintaining the American way of life and maintaining American power, is justified. I don't happen to believe that, but I'm not going to suggest that I've held myself above my own morality all the time. As an example, I have had to in my past, I'm not proud of this, but I'll say it, I've given campaign contributions. And I've given campaign contributions to people who, in a normal circumstance, were they in a crosswalk on a rainy day, I would not have been compelled to hit the brakes. Now, are campaign contributions bribes? I would suggest they are. My own payment wasn't meant to facilitate democracy. It was meant to facilitate access. So when I'm hostile in terms of my discretion, my discussion of other people's moral lapses, I need to be very cognizant of my own. And I suspect that if your colleagues are, as an example, European and technologists, I would suspect that there is a common belief in Europe, as an example, that Brussels is not a bad thing, at least when the policies that come out of Brussels serve the needs of the people considering them. And I would suspect that there is an increasingly common belief in Europe that Europe needs its own defense capabilities that aren't as reliant on the US, and that Europe needs to defend itself from Russia. I don't know how much I subscribe to any of these beliefs, but that doesn't matter. Morality varies with individual incentive and individual narrative. Again, um, going back to Human Action by von Mises, volition is an individual circumstance, not a constant among 8 billion people on Earth.
Rick, the news recently, the mood even that I've noticed around me has gotten pretty pessimistic, right? And I was wondering if our audience could hear from you, if you were in their shoes, maybe in your 30s or 40s today, would you be defensive and go find a way to build yourself a bunker, or would you be excited and probably, rubbing your hands at the prospect of being an aggressive speculator, or maybe finding out what that massive utility you can bring to this society that we're currently living in? How can you share how you would view the world if you were in your 30s and 40s today?
Greatest opportunity that's ever existed in humankind right now. I gave a talk at Capitalism and Morality year before last about the futility of pessimism. If what you do is look at the circumstance around you and crawl in the corner and assume the fetal position, the guarantee is that you lose. So why would you guarantee your own loss? Defend yourself against humanity while simultaneously serving humanity. The fact that 35 workers at a McDonald's are going to be made redundant is no reason for you to make yourself redundant. And by the way, as Deng Xiaoping said, to get rich is glorious. If you follow the fact that your material well-being necessarily involves around generating utility for other people, the fact that you find a way to advance materially is evidence that you've served whatever duty you have to humankind. Understand that the next 10 years are going to be materially different than the last 40 and more difficult. The period 1982 to 2022 was easily the most benevolent period to be an investor in human history. The hegemony of the US dollar, the good forms of globalization, the inclusion of millions of workers into the labor force, the overcoming of prior prejudices, gender-based prejudices, all that kind of stuff. Wonderful stuff. Wonderful, wonderful, wonderful stuff. Sadly over, at least for a while. The good news is that technology has made the generation of utility require less capital. And the spread of education has meant that more people have access to making contribution through technology. For whatever faults the US has, and there are many, we still have had a society that mostly welcomed achievers from other cultures. And we gave them, to some extent, the permission to get ahead. We also invested for a very long time in a pretty good education system. So we had a place, even in bastions of statism like California, where 3 or 4 or 5 or 6 young kids could commandeer a garage in Sunnyvale, and out popped Google or out popped Apple. And that was a wonderful circumstance. It made a bunch of people rich, but much more importantly, it provided the tools for millions of people to generate economic output with less capital input. What makes me really excited about the next 10 years is partially as a consequence of being a director of Students for Liberty and interacting with 160,000 students worldwide on an annual basis. That garage in the next 10 years will not have to be in Sunnyvale. It could be in Lagos, or it could be in Jakarta, or it could be in Kunming. And utility doesn't care about the age or the gender or the nationality of the engineer that causes it to occur. For that reason, I'm extremely bullish. And make no mistake, extraordinary amounts of money are made during periods where the perceived risks are high and the real risks are high and the volatility is high. So for people who have a reasonable view of the risks about them and understand that they'll need to defend the economic delta that they create more aggressively than they have in the past. But more importantly, people who look at their own skill sets and determine how those skill sets could be employed in generating utility that other people are willing to pay for will do really, really, really well. If you look at the S&P 500 in the United States, absent the big technology stocks, an equal-weighted S&P 500 has fallen for 25 years. But the ability of technology to generate unicorns, which is to say billion-dollar entities, contra this trend is astonishing. So then the question becomes simply, do you view yourself as a winner, or do you view yourself as somebody who takes needless breaths?
Love it. Rick, I think we got to close on that because I don't think we're going to get to a better closing statement.
We've probably generated enough hate in the last hour that we don't need to generate anymore. I can see the folks who vote for Mandami losing it over this interview.
Yeah.
Rick, maybe before you go, could you share a little bit about what you're busy with at the moment, just
Sure.
for listeners?
I mean, one of the things I'm busy with is this. People like to listen to me because I'm relatively good at taking complex financial and making them understandable. And so I do that for no compensation because I want to throw a little philosophy in there too. I actually want to make the world a better place before I shed my mortal coil. So one of the things I'm busy with is this, trying to help people with their financial future. And while I'm at it, trying to help them understand their place in humankind and make humankind a little bit better. Commercially, really, I'm involved in 3 or 4 things. Rule Investment Media, which is how most of your audience might interact with me. Among other things, any of your listeners who care what I have to say about natural resource stocks, my real knowledge, can go to that site, ruleinvestmentmedia.com, list their natural resource stocks, and for free, a really good price, I'll evaluate them. Pretty good deal. Over at the Rule Classroom, run by your good friend Albert Liu, there's almost 300 hours now of instructional programming telling you how to be a better natural resource investor, how to do the good things well and how not to do the bad things. And that's free. Pretty good deal. If you like our free stuff and you want our really valuable stuff, every 90 days, we do an 8-hour-long deep dive on one topic or another. Last Saturday, we did one on an area play called the Golden Triangle in northern BC. These aren't free. They're $99. And they absorb at least 8 hours of your life. But more reasonably, you'll have to play the recording. So 16 hours of your life. By the way, a complete money-back guarantee. But this course is designed to give you enough of a background that you can be a successful investor or speculator in whatever the topic was that was covered by the course. Beyond that, I'm celebrating retirement by starting a bank. and I'm delighted to say that my bank is now open. It will be open to the
Yay.
broad public somewhere around the middle of February. We're shaking in all of our banking systems with our own money. You get one chance to make a good first impression, and I want to make sure that your deposit gets deposited, and your checks cash, and stuff like that. But we'll be open to the broad public, I think, long about February 15th. And of course, every year, my granddaddy financial product is the Natural Resources Investment Symposium in Boca Raton, Florida, held this year, July 6 through 10. You can either attend it live, which would be my preference, in Boca Raton, Florida, or more commonly for our European audience, via live stream from the comfort and convenience of your own home. In either circumstance, if you feel for any reason that we haven't earned the fee that we charge you, that tuition is 100% refundable.
Wow, sounds exciting. I feel like signing up for a few of those things. What's the do we know yet what will be the next topic 90 days from now, the next deep dive?
In the boot camp, what we do is we ask the attendees to tell us what they'd like us to teach them. And if the preponderance of suggestions coincides with something that we think we can teach, in other words, if we can design a course around it that we think will deliver substantially more utility than we charge for, we do it. The area play certainly wasn't my idea. Prior boot camps have been around specific commodities. We did a 3-part gold one, we did a silver one, we did a uranium one, or they're around types of companies. This was the first area play boot camp that we did. I think we acquitted ourselves fairly well. But what we do next time will really be a function of what our audience would like us to do. I think there's a lot of discussion at the Rule Classroom that the next boot camp should be around the general theme copper and how investors can position themselves in anticipation of what is almost certainly over 5 years a severe supply shortage. But ultimately, I'm speculating. Ultimately, it will come down to what our customers want and whether we can deliver what it is they want.
Is any last questions?
Well, thank you for the opportunity to share my view. Thank you for the friendship that you've shown my wife and I. Thank you for an evening in Frankfurt that, as a consequence of the high quality beer that I drank, I have only a foggy memory of. Thank you for all you do.
Thank you, Rick.
Thank you for taking the time. Looking forward
yeah, it was really a pleasure.
Yeah, looking forward to seeing you again, either online or offline, whichever occurs first.
Well, I look forward to hosting you in Boca Raton, or if not, via live stream, wherever the two of you happen to be.
Yep, we'll be there.
Absolutely. And that wraps up our main conversation. But we're not done yet. We're going into overtime, where Jason and I unpack some insights, reflect on what just happened, and connect a few dots. And go. Now to the part of each episode that many of our listeners tell us in the comments they enjoy tremendously, where Jason and I reflect a little bit on what we just discussed and heard today with Rick. Jay, how was this one different, you think, than our previous talks with Rick?
I liked it. It was a lot more, it was still philosophical, but maybe, let's say, a lot more applied.
Mm-hmm.
And for me, with Rick, he's this ball of... He's so smart, he's hardworking, he's all of those things, right? But I think his positivity is just always... It's always on tap, right? And you can't drain him. He's just always got barrels of it, and it's contagious. And you get the feeling that if there were more Ricks around, problems in the world would not look so big, right? And doom and gloom will struggle to get a foothold. So I hope that with our podcast and podcasts like ours, the conversation starts going, and more people people like him can reach more of the others, right? So that we might not get too infected, because I get affected by the negative news that I read, right? And I need to, and talking to people like him just helps to inoculate.
Yeah. I mean, I think there's value to absorbing the news, but there's also tons of value to let it register but move on, you know? Like I read a really good tweet somebody posted. I forget which one it was. It was forget his name, but he's this VC guy, big on Twitter. But he's very much, he's like also living his dad image. And anyway, he's doing this whole thing. What he said was, he's like, make sure you don't get your dopamine just from info aggregation, but actually from taking action, right? And so that's kind of the same
That's so
spirit
good.
that I see Rick in, right? Like all the information is important, but get your kicks from actually doing stuff with it, not just from analyzing, right?
Yeah, agreed. Because you can always read one more news article, and you can always know just a little bit more about how bad things are, or even how good things can be, right? So you keep doing your studying rather than learning from making mistakes, right?
Yeah.
What did you think about the conversation? Is our third one with him already, right?
Yeah. Well, so just generally keep. I honestly I can't thank him enough for taking the time, but also, you know, we started this podcast like without a relationship with Rick Rule or others like him that have come on, and now we have built one, right? And he's not the only one, right? We were, I guess, conscientious enough to use the podcast as a means to build relationships and get to know people that we admire and that we want to learn from. And it's just so freaking cool that it's actually working. Right. So, I mean, somebody asked me yesterday, it's like, so about your podcast, but like, what do you like? What's the benefit you get? And I was like, well, honestly, for me, having the ability, like having a chance to have an intelligent discussion, that's worth a lot. And if you are lucky and it aligns that you actually find, maybe you can become acquaintances, maybe you can become friends even with these people. It's like, I honestly don't need more out of it than that. That's phenomenal. Of course, there are tons of other opportunities in addition to that when you try to build an audience. And I think you and I do want to explore and potentially exploit those too. But for the time being, I think it's been so incredibly rewarding as it is. Yeah. So how has this one been different, right? We asked Rick if he had more guest recommendations, and he's like, whatever, I'll come on, basically. And so here we are. So hopefully we can do this once a quarter. And that's why we kind of shifted towards more the current events stuff. And I thought his view on the Venezuela situation was very interesting. I really actually wanted to ask him way more about it. I wanted to ask him how he thinks that plays in the context of like BRICS and all that, because I thought one thing that's very notable with that whole situation is, and there was a Bloomberg article titled, I think, "Silent Allies" about it, and that's the one that really struck me. And it's so crazy because I was thinking that, and like that day the email arrived in my inbox, I was like, it is so nuts that there really wasn't much reprimand or saber rattling or anything on Russia and China's side in context of this Venezuela situation. I think the silence is deafening, right? It sounds to me like deals were made already about the situation, but of course, nobody will ever know until decades from now stuff's declassified or whatnot. So I really wanted to ask him about this, but then it just kind of didn't get to it. I love that he kind of reinforced his point about oil. So I think last time we spoke with him, that was like one of his closing points, that he was bullish oil and gas. And now it's interesting over time how this has become like certainty, like his confidence in it is like increased. So if anybody listening is looking for somewhere to invest, not that any of us are qualified to give you advice, but it's something to check out, right? Oil and gas, very hated sector. So I like that that's very actionable, something that people can spend time and energy doing their own research on.
Or maybe join the boot camp, right? Or join Rule Classroom and then go back to. I'm sure he's had a boot camp on oil.
Yeah.
Talk to the community there, because I've joined the community for a while, and we were on their Boxing Day. Was it a podcast live stream? Yeah, and I've interacted with people in real life that have gained tremendously from taking part in the resources given out at Rule Classroom. So highly recommended if you're interested in investing, and especially in the natural resources space.
Yeah, I also really thought that his like collection of things that investors do wrong, right? Have a good thesis, but choose the wrong time frame. I think that one hits pretty hard. People are lazy. I love his rule of thumb. Like, oh, have so many stocks like you plan to spend hours a month on research. I think that's pretty cool. I've never heard him say that. That's very useful.
And most people, it's zero, because all they do is they listen to a podcast or they listen to a hot tip from a friend, right?
I mean, to be honest, I've never done that level of research he's mentioned. I've never read really quarterly reports or listened to earnings calls or anything like that. I know that people who are successful in the space do stuff like that, right? And then the anti-contrarian thing, that one resonates deeply with me. The only thing that I really don't know is because, like, if you just bought Nvidia or something, right, or Apple early on, you would have done extremely well. Not 10 bagger, 100,000 bagger type stuff, right? However, of course, it's I don't know what you call that, but maybe it's a recency bias or something. Because at the time when you bought the Apple or the Nvidia stock, that was not a popular move. That could have been a contrarian move even.
Yeah, 100%. Yeah.
It hasn't been for a long time, so that's why it's hard to say that. It's hard to throw that in the same bucket, right? But if you bought Apple shares for $1 at the time, that was definitely not a mass hysteria kind of investment, right? That was definitely, it's like, whoa, you're going to do super high risk tech stock, like you're crazy. So
probably buying Russian oil and gas. Then he said that's where the real deep value lies, right? Need to fly to St. Petersburg and go talk to somebody in a dark alley and say, hey, you got some stock certificates, give you some gold coins.
I mean, he said, basically Americans can't do it, right? So you have to reside in and have a brokerage account that's certainly outside of the US and probably also outside of the EU to even do that. I spoke with my friend who is from Venezuela because he was like, oh, what do you think about investing in Venezuela? And I was like, I don't know. What's it like there? And he told me that it's still super, I mean, just like Rick said, right? I mean, it's also only been a couple of days, right? But it's just like the system is so incredibly corrupt. You can't get anything done without paying bribes. It's like, yeah, tax enforcement is very low. So you don't really have to worry about that. But you're making more than up for it in all the bribes you pay to get stuff done. And it's like, well, then I wouldn't, because how can you invest in such an environment, right? So you have to see how that develops. And then when you start seeing like almost like a cultural shift, right, and how people act, then is the time. Then you're still way ahead of anybody else to invest there. But yeah,
these things, it's really in environments that you are not familiar with, you need your hands to be held, right? You need somebody that knows it like the back of their hand to then guide you through it, So even when the culture shifts, I guess you want to get in there before the culture shifts, but with somebody on the inside showing you the ropes so that you can get into position. And then, when the upswing comes, you're already seated, right? And having friends like that's good, because they tell you. I mean, I always tell people when they ask me about investing, I always say, hey, you should make sure you do put your capital into something that you feel like you have an edge in, right? And that edge should be not just what you read, but also your personal relationships, your experience, your interests, right? All those things need to stack somehow before you can say you know something better than the average participant in the market does, right? But who does that? If they don't have a job that they're exposing themselves to things at a deeper level than what you read on a screen, it's so hard to get that edge, right? Like us meeting people in the solar industry in China, just that alone is already so, you probably get so much more insight to add on to what you read on Bloomberg about the First Solar or the 10 ETF or whatever, right? Just listening to the people in the industry is so important. And I think that's where people like Rick and they, they do so well in, because they do the site visits, they have their relationships, right? Brian Lenny goes out and camps at the mine site for a week and hangs out with the CEO, and right, that's how you need to build your edge.
Yeah. And I mean, I think people would fear putting in that energy and not getting anything out of it. Right. And it's like, oh, it was just a waste. Like I camped there for a week and stuff. But the thing is, like, how many people are you? The question really is like, how many others are going to be at the campsite with you? And if the answer is like one or none, then you know you're building an edge by doing it. Right?
Yeah.
It's, and you know, anyway, yeah, it's. But yeah, so what you said in the beginning, right? It's so nice to connect with Rick because he has so much of this optimism. Like, and his is it's a hard one optimism, I want to say, because it relies very much on like, no, you need to be smart and you need to be hardworking. And if you are those things, your outlook is bright, right? You can be assured that the world's your oyster if you go for it, right? So I think that resonates really strongly with me. And I would love to. He said that at the previous year, at Jayan's conference, he talked about the futility of pessimism. I would actually
Yeah, we
love
should
to
watch it. Yeah.
dive into that with him. Yeah, if it's out there somewhere. If not, maybe we'll ask him to recap it for us.
I'm sure it's out there on YouTube, and Giant probably. Maybe the next session we can talk to him a little bit more about that, right?
Yeah. And then his statement, right? Defend yourself against humanity while producing value for humanity. That's freaking gold right there.
Yeah, that's so deep, right? It's such a paradox, but it's just where you have to balance your expectations and your endeavors on. It's insane. That gave me goosebumps when he said that. I also like that he says you have to provide value and utility, right? It's not enough to be smart and hardworking or whatever, right? You need to provide something for others. You need to serve humanity, right? And I think that cuts to the chase so much, especially here I am in Europe, right, where I talk to people and I often hear, oh, I deserve this, I deserve that, and oh, it's not fair. And it's like, just go out and do it and get what you need, right? Eat what you kill. It's not about what you deserve. You deserve what you get, right? But that way of thinking of, hey, I provide value first and then see what I get is sometimes lacking. And people think, hey, I've got this degree, I'm a PhD, or I'm a XYZ citizen, or I live in a social democracy. That means I deserve something, right?
Well, yeah, and so the way I look at it as an employer, right, it's like the degree is great. It's a tool in your belt, but it by itself does not mean that you are very productive at applying the tool, right? So that you perpetually need to prove every day, I would say, and ideally you derive some pleasure from actually doing that, right? Because then it becomes easy. I was thinking that the other day, somebody said to me like, well, so many things that are hard for others come easy to you, Lovis. And I'm like, I really don't think that's true.
You make it look easy because you've been struggling with it, I think, is why.
Well, it's like, think of it in the gym, right? Like the what's the weight of the bar on the long dumbbell? It's like
20
20
kilos.
kgs, right?
Yeah.
So if you've never lifted anything and you pick that up, you're like, frick, that's heavy. But if you've been deadlifting 100 kgs, then you're like, oh,
Yeah.
this bar is nothing. 20 kgs is nothing, right? So it's like if you get to a point where you can do one thing incredibly well, then yeah, something that's very hard for others is easy for you, and you'll make it look very easy, and I think your utility to others will be exponentially higher with that specialization on your side, right? If then of course you have complementary skills, it gets even better. So if you can do something like Rick, right? He understands very complex things. That's awesome. But he can also then break them down, communicate them very simply. So he has two abilities and he stacks them, right? Communication ability and the ability to understand complex things. And then you add a third one on top, and so that he actually likes to do podcasts, for example, right? He might be a really good writer, but then maybe video is more viral or something, right? So then you have a third thing, and then you build your little stack, and all of a sudden your utility to others goes through the roof. So, and I think that's like a bit of a mismatch in our education system, because everybody wants you to be like, especially in Germany, me growing up in Germany, it was always like, you want to be well-rounded, right? And you have all this like core curriculum stuff. It's so broad, and you need to know everything about everything. And while some aspect of that I don't disagree with, that cannot be the general plan. Like, I think we should look at the natural aptitudes and interests of people way earlier during that childhood, adolescence education, and let them specialize into certain directions earlier, but then give them the complementary skills so that they can, like, if they love physics, like, yeah, let them do a ton of physics, but also then make them talk about it and write about it, because that's how you get the physics nerd to become a good writer, for example. I mean, who am I, right? I'm not a teacher by any means, but I do have kids and I do think about these things, right? So I think that's a way, right? And so then, because then you see people on the internet who do whatever the F they want, and they manage to gather a freaking massive following to the point where they can easily live off of something like video gaming, right? Where other people are like, oh, I just want to work so I can get home, turn on my PlayStation and be left alone and do that. It's like, there's a career hidden there in your living room, but you're not taking it serious enough to make it your career, right? So like, you could absolutely become a pro gamer, start behaving like one, right? So in a way, Rick is saying, I think, completely right. Like, life has never been, there's never been more bountiful opportunity, but you do have to take what you're pursuing seriously, right?
Agree. And yeah, I agree with you also on the aspect of, when you have kids, you're thinking about how to help them with their development. And I also think about that. Like, the value comes, it doesn't help you when you can do 58 times 10 a lot faster than, like, a millisecond faster than the next guy, right? That doesn't add that value. But it's good for you to know, but it doesn't add that value. So how do you get to that delta where you are better than most other people, and then stack that with a few other things where you're a bit better than other people, and then as a compounded product, you're unbeatable, untouchable, right? But yeah, keep doing hard things, keep chasing your interests. And I think take it as a good thing that people tell you you look like you that things come easily to you, because I've hung out with you a lot and spent a lot of time with you, and I know the amount of hard work you put into things, right? And the discipline it takes to, what was it? We were in China and went out till I don't know what time the night before, but the next day you were still dragging my ass to the gym saying, hey, let's go do some weights, right? And that's then at some point when somebody looks at you and they see that you're fit, they think, oh, look at Lovis, he's just, oh, I'm struggling. I got backaches, everything. Lovis is there juggling his kids around and it looks so easy. Oh, it must be so easy for him. But they don't see the hard parts, right? Something that blew my mind, I play tennis a lot, right? And I saw this interview where this guy went on the street and he was just showing people like matches between like Djokovic and Federer and maybe even some old stuff like Andy Roddick and all that, right? And he's just asking randoms like, "Oh, do you play tennis?" And they go like, "Nah, not really. Yeah, no, not. I watch it, but I don't play." "Oh, do you think you could go a few rounds with these guys?" And they're like, "Yeah, sure. Why not? Like, I could give him a run, right?" Because, and when they ask, "How can you think that?" They say, "Just look at it. It looks so easy, right?" So they've never picked up a racket and they look at other people playing that are professionals. And because they're professionals, they make it look easy. Therefore, they think it must be easy, right?
Right. Yeah.
So
Yeah. I
funny.
mean, yeah, it's similar, right? When you watch a Formula One race, they nail the perfect line. Like even the shittiest Formula One driver is a freaking rock star driver, right? So they nail the perfect line almost every round, and the cars look slow going around the track when you watch it on TV, right?
Yeah.
So then you're
Yeah.
like, I could do this, right? But then,
Yeah.
of course, then you see on YouTube that there's like this guy with a channel. They put him in the spare third row car, whatever, from 2 seasons ago, and he can't even push the brake pedal hard enough to produce full braking pressure. Right?
Yeah. Yeah. Yeah.
And he pulls out of the pit lane and already stalls the motor. Right? So it's not easy, right? It's really freaking hard. But
Yeah.
you make it look easy. That's a sign of like you've got some mastery, right? But yeah, and so the same thing with Rick, right? So he's reviewed 100,000 investment portfolios. So naturally for him, it's now become easy, right? But he's put in the work.
You know what's my Glückskind moment tonight? Is when Rick starts talking about options and saying that our strategies, like the strategy we've been using is something that sounds like a good thing. When he started, I was like, oh no, is he going to say that this is what like charlatans and like blind gamblers do, right? But then when he starts going, oh yeah, you sell volatility and most of the time you get that for free. That's a great strategy, right? I'm like, oh, did Rick Rule just come on our show and say how we invest is not bad?
Yeah. And I love how he actually led up to the point, right? He's like, well, the dividend, don't underestimate that whatever 2-3% dividend you might make while you're waiting for your thesis to play out. And then he was like, and you can increase that dramatically with
Did you mention to him when we met that I was investing in options? Like, how does he even know? Or did he?
We talked about it for sure. Yeah. He had asked me like he's like, well, how did you guys get into the podcast? And I was like, well, you can tell by the name. And he's like, yeah, I was curious about the name too. I was like, well, we started with this app with to help people sell covered calls, and the first pass of that anyway, right? The podcast was like the favorite product out of this, and so we're just running with that. And he's like, oh, well, sounds like an app that would help people sell options would actually be quite a good idea and may potentially a lucrative business. And I was like, we think so too. So that's what we're trying to keep doing that. And so now, of course, you and Flo with Days to Expiry are still pursuing that. Daystoexpiry.com. Go check it out. But yeah, you can in fact boost your income, right, dramatically. And I like how Rick frames it as like a low pressure, like take it as a free upside thing. Like don't try to maximize your like I think you and Flo are like more aggressive. You're almost like you can like cover your like real life burn with this, and it's awesome that it can be that powerful. But if you just think of it as like, hey, you know what, I'm getting a 2% dividend, if I can push that to 8 per year, right, I'm doing incredibly well while I wait for my 300% increase in the underlying, right?
I mean, seriously, I checked on Exxon right after we spoke to Rick last time, and I even made a Reddit post on it. I think you can sell like 5% out of the money puts and get 1% a month, right? So it's basically you queuing up to buy Exxon. I mean, I need to double check the numbers, right? But I think it was at 120, and you can queue up at like 110, and you get paid 1% a month. on a company that will most probably not go bankrupt that you're bullish on, right? And you have why not make that 10-12% a year, right?
Yeah. And if it does dip, right, own it for the discount.
If you're gonna buy it anyway. So yeah, man. So I had a ton of fun. I hope you did too. I need to pinch myself, like you said, that now we can meet people like that in real life and hang out with them, and then get them to help us to think better and be better.
Yeah, incredible. All right, man. Enjoy the rest of your evening, my friend. I'll get to editing this as quickly as I can so we can get this posted.
Okay. Thank you so much, Lovis.